Peak Wealth Management proudly presents Finding True Wealth with certified financial planner Nick Hopwood and accredited investment fiduciary Jim Pilat. Nick and Jim believe by making simple, good financial decisions, you can retire with confidence. And now, let's turn it over to your hosts, Nick and Jim.
Welcome, everyone, to episode 84 of the Retire with Confidence podcast. I'm Nick.
I'm Jim.
And Jim, you're wearing the same shirt as episode 83.
It's one of my favorites.
Absolutely. So today is going to be the U.S. election, various outcomes, and market fallout or market results.
Yeah. I think this will be really interesting because I'm sure you're the same, but I hear one comment made more than any other time is during election time, people talk about, I got to wait until the election's over before I invest, right? They're always anxious, they're always nervous about what's next during an election year. So this could be helpful to go through and see what reality is.
And there's also people that are invested that are horrified if their person loses.
Very true.
So they talk about, raising cash in advance, right?
Yeah, if so-and-so gets in, they're gonna destroy it. We gotta be ready.
What's interesting is that I don't remember people having that type of fear up until 2016. I don't remember it in 08.
Maybe like a lot of things, social media drives a lot more opinion than it used to.
Recency bias, right?
Yeah.
I'm sure that in 2008 there was tremendous anxiety as well. But anyway, in 2016, what I remember is that people were deathly afraid of Trump winning. Mm-hmm. And I'm talking about market pundits and investment managers,
right.
Retail clients. Everyone thought if Trump wins, it's going to go down.
Right.
And we had some people who made some selling in advance. Mm-hmm. And everyone was wrong. In fact, I remember on the election night when they started bringing in the results, like maybe around 10 p.m., mm-hmm. when Trump started getting some electoral votes,
right.
the market started tanking, the futures market.
Big time.
And I thought, oh boy, here we go,
mm-hmm.
right? And I fell asleep on the couch, mm-hmm. right? That happens on election night sometimes. And I woke up at like 2 or 3 a.m. and it showed that Trump secured the nomination and the market was rebounding. And I thought, this is strange, because mm-hmm. the Dow had gone down like 700 or 1,000 points.
It was over 1,000, I think, yeah.
Between, normal market close and like 2 a.m. Mm-hmm. But then he came out at 2 a.m. and gave a speech, and he was very presidential.
Yep.
And people, this is just my take, that people were saying, wow, he's not gonna, push the button,
Yeah, maybe he's not the wild card we thought he was.
Maybe it's not gonna be so bad.
Right.
And, I kind of never looked back, right?
Right?
So everyone was fearful of this one outcome, and the opposite happened, right? The market responded positively. Mm-hmm. So what do you make of that? Put you on the spot.
Yeah, I think it just shows you that it's so hard to time a market, to predict a market, to know what's going to happen. I think one of the biggest things that comes out of that is businesses figure it out. Businesses mm-hmm. are run by really smart people. They just need to know the rules. Once they know the rules, they can adapt and they make the changes necessary for their business to succeed.
And on that point, in 2010, when Obamacare was passed, mm-hmm. right, you really wouldn't expect insurance companies to do well. Right. I didn't think they would.
No, there was a lot of fear. Yeah.
Because of all the new regulation. But it turns out between 2010 and I think maybe 2016, don't hold me to this stat, mm-hmm. but in this several year window, mm-hmm. the health insurance sector was the best performing sector in the market.
Yeah.
Just so you kind of have this negative expectation and then they're the best, literally number
the reality,
one. And then let's see, in my notes, I do show that in 2008 that we had a lot of fear in that election as well. So I don't know why I said that earlier.
Yeah. Recency bias.
Yeah. Oh, and yes, people like those health insurance companies, they played by the new rules and
right.
they executed flawlessly.
Right.
Right. So whatever the sector is, whatever company you're looking at, they're gonna find a way to succeed.
Right. It doesn't mean that a new administration coming in doesn't create challenges or problems for them. But I think the thing that we need to look past is that they can figure that out, and they can make the adjustments necessary to still be successful in those environments.
So Vegas right now says that there's a 60% odd. The odds are 60% that Biden wins.
Mm-hmm.
Okay. The market 3 months before the election,
Mm-hmm.
right? If the market's up for the 3 months,
Yeah.
then the incumbent wins 20 out of 23 elections.
Right.
That's compelling. That's pretty good stats.
Yeah, for sure.
If the market's down in those 3 months, then the incumbent will lose.
Mm-hmm.
Okay. The other thing that's interesting is recession years, right?
Mm-hmm.
I always thought to myself, Jimmy Carter had a recession, George Bush Sr. had a recession,
Mm-hmm.
and they're gone. And we have a recession this year,
Mm-hmm.
right? Which is not good for Trump.
For the incumbent, yeah.
Yeah, for the incumbent. But it looks like the recession is ending there, right now.
Right.
Right. We had minus 30-some% GDP for the
Mm-hmm.
second quarter, and now for the third quarter, it's looking like plus 20 plus,
Right.
20% or more.
Right.
So that would signal that the recession is over.
Yeah.
But we still have a 10% unemployment rate.
Right. Yeah, there's still no doubt the pandemic has caused a lot of challenges still that are yet to be resolved, but it'll be interesting to see how that stat pans out again and what
So for people that are afraid of a Biden victory,
Mm-hmm.
right, what are they afraid of? Taxes,
taxes, yeah.
new regulations. People
Right.
that are afraid of Trump, right? Well, ongoing China,
Mhm.
like a new Cold War with China, right?
Right.
That rhetoric is getting bad,
Right.
and they don't like his tweets, right?
They
Among
don't.
other things, yeah.
Right. They don't like his tweets, yeah.
So we read also about a blue wave. So if the Democrats take over the Congress, the Senate, and the White House,
Mm-hmm.
right? Okay, so we have various scenarios, right? The blue wave, Biden wins, Republicans control the Senate. There's a various matrix,
Mm-hmm.
various outcomes. But what seems to be the best way to go?
Yeah, and I think that people, no matter what scenario that is, people want to take money out. They want to put money in. They want to sit on the sidelines, right? American Funds actually did a really interesting piece that analyzed the last 22 election years to see what was the best strategy, right? Do I just leave it invested? Do I just keep putting money in, or do I just pull money out and just sit it out on the sideline? So basically, they said out of the last 22 elections, 19 of those times, people were better off staying put or continuing to add money. So only 3 times did actually taking money out, putting it on the sidelines, did you come ahead return-wise.
Interesting. That's kind of like the pandemic, coronavirus fallout.
Right. Yeah, for sure. The other thing they said was, people that do this though, right? Money market assets pile up in election years. It's 3 times higher in election years. People being afraid, taking money, putting it into cash and sitting on the sidelines, 3 times higher in election years. But again, history will show you that that's a mistake. It says only 2 negative return years out of the last 20 election years. So, and those 2 years were highlighted as 2000 and 2008, which I think could probably not necessarily be attributed to the election. Would you agree?
I would say that they're attributed to the recessions of those years.
Yeah, absolutely. Or asset pricing, right? Bubbles in the market, something like that. So history will show you that just staying calm, riding it out, and letting the market figure it out is your best option.
Yeah. And speaking of selling when maybe the market's down or selling ahead of the expected event, and we only had a couple of people take money out of the market during the March pandemic panic time. And I was really proud of our people. We had a lot of calls, okay, but only a couple of people took action, and no one pulled the plug and just cashed out.
Right.
People that took action, they made a decision on the margin to raise some cash, out of fear, right? And it's a very powerful emotion, right? And it's the same kind of emotion here when we're thinking about the election.
Yeah, absolutely.
But the people that stuck it out
they're
happy
rewarded
that they did.
for it. Yeah,
they were
for
rewarded.
Sure.
Absolutely.
Yeah, absolutely.
right, so what else do we have on the election side?
One of the other things I thought that was really interesting is they talked about market volatility, and some people may be saying, well, the market's all over the place during the election. Historically, it shows you that it's during the primary season that is when the market is volatile. Once the nominations are made, the volatility starts to subside. But they said on average, the market is up over 10% over the 12 months following the primaries.
Interesting.
Yeah, I think that was worth noting.
So I think that it's pretty clear of a message, right?
Yeah, and it just references too that it's people always think, well, this time is different, right?
Yeah,
Every time, there's more volatility this time, or the presidential choices are crazy, or whatever your thought is, right? It doesn't necessarily mean this time is different, right? This volatility is normal. We see it in election cycles, and again, staying the course is the best, proving to be the best scenario.
But isn't this time different?
Of course.
So it's not advice, not general investment advice, but I think it's pretty good evidence.
Yeah, I think it's just worthwhile looking back over history and seeing what history shows us about elections. And I realize that the political and the economic challenges we're facing now, right? They seem unprecedented, but if you look back over past election cycles, they're all filled with uncertainty. They're all filled with the fear of the unknown, right? But I think a lot of the research will show you again that staying the course and continuing to go with the strategy is the best way to move forward.
Thank you, Jim. So that will do it with our election podcast. We hope that you stick around for the next one.
You've been listening to Certified Financial Planner Nick Hopwood and accredited investment fiduciary Jim Pilat on the Finding True Wealth podcast, sponsored by Peak Wealth Management. You can learn more about Peak Wealth Management by visiting peakwm.com or follow on Twitter at nhopwood1.